Good morning, everybody. We have a mixed trade in the grain markets here early on Thursday morning. It is 6:30 a.m. Central Time. May corn futures up 2 cents at 5.36. May soybeans are down 3/4 of a cent at 14.09. May Chicago wheat down 5.5 cents at 6.47. May Kansas City wheat is down 6.5 cents at 6.10. China soybean complex is weakening. Meal futures on the Dalian Commodity Exchange fell to their lowest level since late December yesterday, perhaps on fears regarding additional African swine fever outbreaks. The government has reported a couple of different outbreaks, very small ones, but I think the trade is perhaps a little bit concerned that maybe this becomes a trend. Dalian corn futures also soft yesterday, but rebounded today. Soybean futures also soft. So that could have something to do perhaps with yesterday's weakness in some of these markets. Crop estimates in Argentina are falling. The Rosario Grain Exchange reduced its estimate for the country's soybean crop to 45 million metric tons, down sharply from 49 previously. USDA was kind of in the middle at 47.5 earlier this week. The exchange, of course, citing drier weather as the reason for the cut. Now, Argentina's weather forecast actually shifted a little bit wetter in the extended forecast yesterday, and perhaps that also had something to do with yesterday's sell-off. Brazil's currency is very weak versus the US dollar. The real traded its lowest level versus the dollar since May of 2020, just yesterday. So overall, that's a negative factor for the US soybean market. In fact, I think some people would argue that if it were not for this currency relationship, if it were not for a very weak Brazilian currency, maybe our US beans would be at even higher prices. You know, you look at the stocks to use ratio in US beans, you look at how tight the balance sheets are, and you could very easily make the argument that old crop beans should be $1, $2, $3 higher, yet we haven't seen that, and maybe this currency relationship has something to do with that. U.S. ethanol production has rebounded following the late February polar vortex event. Weekly output of 938,000 barrels per day was up 10.5% on the week, but still down 10.2% versus the same week last year. Ethanol production and gasoline demand have improved, but are still very consistently running below what I would call pre-COVID levels. And I'll put this chart that I've showed you before on the screen here. This is ethanol production, or U.S. ethanol production seasonally. And you can see that, you know, prior to 2020 and this year, ethanol production largely saw very little volatility. You'd be back and forth in very small ranges in regard to production. You know, you generally average somewhere just north of 1 million barrels per day. And we've seen massive volatility in U.S. ethanol production through 2020 and now into 2021. The big spike down here that you see in this 2021 bar is, of course, that polar vortex event, and now we've seen the big rebound, but we're still not back to levels that we saw in, say, 2017, 2018, 2019. We're still running a good 10% below those levels, and the same can be said for gasoline demand also. Gasoline demand is running, it was up 7% last week, but still down about 8% versus the same week last year. So we've still got some work to do in terms of ethanol production, getting people driving again, but it looks like we're trending in the right direction. We've got this vaccine being distributed. I think people, just in general, and just in my experience, I think people are slightly less concerned about COVID than they were a few months ago because this vaccine is being distributed. So that is perhaps a positive moving forward. Looks like there's quite a bit of rain in the forecast for U.S. HRW wheat areas, and I talked about this rain forecast yesterday. But there is, if you look at the maps here this morning, if I can find this map, they are looking for quite a bit of rain over some of these key HRW wheat areas. I mean, Kansas, Oklahoma, Nebraska is going to see a lot of rain. Nebraska has been very, very dry. North Texas is going to see some rain. The map that I've got on my screen here is the forecast from today through the 27th of the month. So we're talking the next 2 weeks. Quite a bit of rain there. And if you look at the wheat market, it's been under pressure. This certainly may have something to do with that. The USDA will release its weekly export sales report this morning at 7:30 a.m. Central Time. We've seen some softer corn sales in particular. Last week's net sales were the worst seasonally since 2013, and sales the week before that were soft as well. So old and new crop combined, they're looking for 425 to 850 in corn this morning. Soybeans 250 to 650, wheat 150 to 450. Those corn and soybean numbers appear even a little generous to me, but we'll see what happens at 7:30. We've seen some stuff with unknown destinations switching or canceling. We've seen a lot of different things going on here. Remember, tomorrow is last trading day for March grain futures. Make sure you examine any remaining open positions there. Live cattle futures ended yesterday with some marginal losses. Feeder cattle futures, marginal losses, marginal gains in the hog complex or in the hog market. So no big moves there. Cash cattle yesterday, same deal, 113 to 114. It hasn't budged in weeks. The boxed beef market was a little bit lower yesterday. And the outside markets here this morning, we've got the S&P up 25 points. The Dow's up about 100. The gold's up $8. Silver is higher. The U.S. dollar is a little bit lower. Crude oil is up 78 cents in the April WTI at 65.22, holding together pretty well here, although off the highs. We've got the bonds up just a little bit. Remember, if you guys need some more information from me, as always, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan here in the upper right-hand corner. For $49 a month, I will send you my morning email. I'll send you my text message service. I will let you know when, how, and specifically I am pricing corn, soybeans, and wheat throughout the year. Those recommendations are broken down by crop year, by percentage. They're very specific. They're tracked every day of the week. You do not need to be a futures or options trader or even have an account. No other additional fees here, guys. You can cancel this thing at absolutely any time, so certainly check that out. Everybody have a great day today. I will talk to you Friday morning.